Welcome to another episode of China Update, where I provide you with the most up-to-date political, economic, and geostrategic analysis on the world's number 2 economy. My name is Tony. Let's jump in. Okay, happy Tuesday everybody. First up, a thank you to everyone who provided some feedback regarding yesterday's video and my sponsor. I've taken this on board and I will take this into account as I work with other sponsors in the future. Let's begin today's episode with economic updates. First the good, and then we turn to the bad and the ugly. And a piece of positive news, Hong Kong's benchmark stock index, the Hang Seng Index, rose for the 10th straight session on Monday, a sign of some global investor confidence returning after years of pain in the Chinese capital markets. Part of this was due to the base effects. The index is still down year on year and below where it was about 10 years ago. We remember that in the lead up to the Lunar New Year, Beijing authorities pulled out the stops to stimulate domestic capital markets at historic lows, including by compelling national champions to buy up stocks. The Hang Seng Index is now up 9% this year. According to a Sunday report by Huatai Securities, foreign investment was likely a driving force behind the recent run-up in the market because Chinese mainland investors had been largely absent last week due to the Labor Day holiday. According to a Friday report by Goldman Sachs Group Inc., global hedge funds' net allocation in China increased to 7.5% by the end of last month, up from 6.9% a month earlier. In a note published over the weekend, BNP Paribas SA expressed, quote, "We are rolling up our MSCI China target to the bullish scenario, as the April Politburo statement indicates a stronger commitment to a pro-growth and pro-reform policy agenda." End quote. So we are seeing some investors cautiously re-entering the market. However, analysts agree that the protracted property downturn is one of the biggest drags on the world's second largest economy, which brings us to the next story. We remember last week the Politburo readout, quote, called for coordinated research on policies and measures to digest existing housing stock and optimize new housing, to urgently establish a new model for real estate development and promote high-quality development of the real estate sector. End quote. A sign that the highest leadership of the party remain deeply concerned about the housing sector. According to data from the China Index Academy, one of the country's largest independent real estate researchers, published yesterday, home sales fell in 19 of 22 surveyed cities during the 5-day May Day, Labor Day holiday period compared to the same period of 2023, and were down more than 60% in the major cities of Guangzhou and Shanghai. Meanwhile, this week, Chinese financial media outlet Caixin reports that China's outstanding personal mortgages declined at a faster pace of 1.9% year-on-year at the end of March, quote, as the protracted real estate downturn continues to weigh on demand, end quote. The rate was 0.3 percentage points faster than a quarter earlier, resulting in a balance of 38.2 trillion yuan, $5.4 trillion at the end of March, figures from the People's Bank of China show. It also marked the 4th straight quarter of decline in this key indicator of housing demand. Quote, growth in the indicator started to deteriorate in the lead-up to China's property crisis, which was sparked in 2021 where China Evergrande Group defaulted on a dollar bond for the first time. End quote. The outlet explains that falling enthusiasm for property purchases is also reflected in sluggish sales figures. New home sales measured by value plummeted by 30.7% year-on-year in the first 3 months, widening from a 6% decline for the whole of last year. China's top 100 developers saw their new property sales by value in the January through April period fall 46.8% year-on-year. Then, according to data from the China Real Estate Information Corporation released over the weekend, we learned that second-hand home sales surpassed those of new homes in the country by floor space last year for the first time since private property markets emerged in the 1990s. Zelina Zhang, head of East Asian corporates at research group Credit Sites, expressed on the news, quote, the primary market is really shrinking in terms of both supply and demand. I think going forward you will see more vibrant activity coming from the secondary market. End quote. According to the National Bureau of Statistics, sales of new builds are falling sharply. In the first quarter, property sales by floor area of primary residence, new homes, fell 19.4%, but prices are falling for second-hand markets too. In March, second-hand home prices in China's 70 biggest cities fell 5.9% year-on-year, the biggest price plunge on record. In the same month, prices of new homes fell 2.7%. Meanwhile, in recent days, we have seen yet more major cities remove purchase restrictions. The southern megacity of Shenzhen, which borders Hong Kong, has loosened personal income tax and social insurance payment requirements for home buyers in some districts and said it would allow local families with 2 or more children to buy another home in some non-core districts. Next up, we have one more economic update to cover, and then we discuss big changes to the People's Liberation Army. If you're getting some value from today's episode, I have a huge favour to ask. That is just 2 clicks of the mouse, liking and subscribing. Patreon and Buy Me a Coffee links are also in the description below. This channel is committed to having the majority of funds coming from subscribers and not through corporate sponsorship. And so this is a huge help to keep the channel going too. Thank you so much everybody for the ongoing support. Let's continue. According to official data published by the Ministry of Culture and Tourism yesterday, Monday, over last week's 5-day Labor Day holiday period, Chinese travellers made 28.2% more trips and spending rose 13.5% versus the 2019 break. However, commentators were quick to point out that real GDP is up 27% during that 5-year period, which suggests that spending as a share of GDP was actually down from 2019. Michelle Lam, Greater China economist at Société Générale, said that the official data translate to a 11.5% drop in spending for each traveller over the holiday, which ended on Sunday. Quote, "The concern is that pre-visitor spending was below 2019 levels, which means in general people are only keen on travelling but not so much on spending money." End quote. In a Monday note, Goldman Sachs economists expressed, quote, "Spending per head softened and was again below the pre-pandemic level, owing partly to more tourist flows toward lower-tier cities and suggesting continued consumption downgrading." End quote. Next up, and finally for today, the People's Liberation Army Strategic Support Force, created in the massive PLA reforms announced January 2016, has been disbanded in a big shake-up to the PRC military, with an aim to improve the army's ability to fight what China terms informationalized conflicts and enhance the PLA's power projection capabilities in space and cyberspace. The PLA SSF was a force purportedly designed to break stovepipes in the intelligence sharing and coordination departments of the different branches. That was the rationale for its creation back in 2016. However, the SSF has now been dissolved and split into 3 independent arms: the PLA Aerospace Force, the PLA Cyberspace Force, and the PLA Information Support Force. Beijing's efforts to further strengthen the PLA are closely watched as China challenges US dominance in the Indo-Pacific region and wields its growing military power to, some argue, intimidate various neighbors in territorial disputes. Hong Kong-based South China Morning Post, writing on this new PLA shakeup, reports that the new force will, quote, "focus on obtaining information and distributing it across platforms and forces and ensuring that the other side won't be able to obtain information," end quote, citing a PLA expert who added, quote, "In the past, different forces had independent data chains, and it's rather hard to integrate them. Restructuring would better equip the information division to improve joint forces operations." End quote. Ni Lexiong, a professor at the Shanghai University of Political Science and Law, said the new information support force will strengthen the PLA's situational awareness while weakening those of its enemies. Quote, "The restructuring is essential because of the decisive role information plays in modern warfare, but those functions overlapping among different units in the SSF when a certain military technology is very important to the outcome of a war. The troops in charge of this military technology will be separated from the original military branch and become a new branch of the military. New information, intelligence, and electronic warfare have become decisive, so this is why the Information Support Force became a separate force." End quote. Meanwhile, John McReynolds, China Security Fellow at the Jamestown Foundation, told US media last week, quote, "When the SSF was created, they rearranged existing capabilities under a new command structure. We guessed at the time that might be transitional, and that has now come to pass." End quote. Combining cyber information and space forces under the SSF was viewed as an attempt to create similar direct control, but experts on the Chinese military said that leaders had unwound that structure as a result of an incident last year in which a Chinese surveillance balloon was shot down by the US, as well as corruption investigations into generals and a failure to achieve synergies across the different divisions within the SSF. However, we cannot know for sure whether this is the case, and the reasons for this shake-up are up for debate. Quote, "So why this change? 8 years after the massive PLA reforms and the creation of the Strategic Support Force. My guess is that 8 years on from the 2015-2016 reforms, and as technology and warfare have changed so much since then, as shown by the Ukraine war, she et al. Realized that they needed to do another reorganization to be more effective and efficient. What exactly will the new Information Support Force do? Will it have an intelligence role? Will it be responsible for the massive amount of technical intelligence the PLA now collects? Someone needs to collect, process, analyze, and distribute all the info they are collecting. Whatever is going on, I lean towards seeing this change as another sign that she can mostly do what he wants with the PLA, not a sign of weakness." End quote. Okay, that is today's episode of China Update. Thank you so much, everybody, for watching. Have a good Tuesday, and I will see you all tomorrow.